so much to our panelists talking about European legislation. We're now going to be flying over the Atlantic Ocean to North America, a small country south of Canada, which you may have heard of, called the USA. Often been said that if the US regulator sneezes, then the world of crypto will catch a cold. And that's precisely what we're going to be discussing today. Exporting innovation, how US crypto policy impacts absolutely everyone else. So I'd like to welcome to the stage our moderator for today, Mr. David Rodman.
Good morning, everybody. I'm David Rodman. I'm the managing partner of the Rodman Law Group. Our biggest practice area is Web3, and we represent clients in every vertical from venture funds like Bankless Ventures to DeFi trading platforms like Parcel. Most germane to this event, we represent Proximity, if you room up there, Keepom, and our fearless leader, Ilya. With me today are Lisa Loud, Executive Director of the Secret Network Foundation, and Teana Baker of Taylor, of Circle. And I'm going to let them introduce themselves.
Hi everyone, I'm Lisa Loud, Executive Director of Secret Network, and I'm really honored to be on this panel today because my illustrious fellow panelists know a lot. I have been in the crypto space since 2017, and I'm one of those people who has been affected by the US policy changes and the ups and downs. I come from big tech, PayPal, Apple, and have been in, I was leading Shapeshift for a while, and now really focused on privacy in blockchain and how it's a good thing, how it can be a good thing, not necessarily the bad thing that everyone seems to think it is. But I've learned so much in our backstage conversations, and I'm really excited about this panel, so I will pass it over to you, Teana.
You guys hear me?
Yeah.
Yes? Okay. I'm Teana Baker Taylor. I'm the Vice President of Policy and Strategy at Circle for the Europe, Middle East, and Africa. So I lead our engagement with government and regulators outside of the US. However, prior to that, I've been in the policy space in this industry for about 7 years. And my job before Circle was the Chief Policy Officer at the Chamber of Digital Commerce, which is the largest kind of trade body and advocacy arm for the digital asset industry based in DC. So I spent a lot of time on Capitol Hill and with US regulators as they were thinking through what their reaction might be to something like MiCA. So we just heard the panel before that Europe has progressed with regulatory clarity for this region, which has a lot of benefits. There's some cons for sure. But I think around the world, we're seeing jurisdictions really attack or approach how they're going to put rules of the road in place. In some cases, very proportionately and practically. In other cases, with a little bit more kind of focus on risk and strict rules. But what is clear is that as the US kind of sits back and struggles to get their arms around what to do, the rest of the world is not.
Yeah, so I mean, that's what we're talking about here today. So we're sitting in a European city, and show of hands, how many people are American? Maybe like half, a little bit less. How many times have we heard Gary Gensler's name today, or yesterday, or have we heard discussions about intricate IRS code? I would posit that there is no other industry that international in focus and permissionless in nature that spends so much time thinking about what it is America does and what it is America says, because it really does impact everyone. And I think, Lisa, you had some very specific ways that non-US exchanges were treating your project. Can you tell the audience about that a little bit?
Yeah, sure. Well, in this last year, it has become very difficult to maintain a bank account as a crypto company, and I actually have a company in Canada as well, so I can tell you it's even worse in Canada. just the risk appetite of the large institutions, like the banks in Canada, is very, very low. So most of the crypto projects I know in Canada have been debanked recently. KuCoin has withdrawn from Canada, Binance has, and these are all reflective of what's happening in the US. With the failure of the big banks, Silicon Valley Bank and the others, Signature, we're seeing that the rest of the world, especially in Canada in my case, is very much like taking okay, hands off, let's see what's gonna happen. I think that's what you're referring to. It's also, from the point of view of a secret network, we are seeing that exchanges are deciding that even though secret network, our token is not a privacy coin, we have clear transactions, we do confidential computing. We've seen companies like Binance want to delist us, threaten to delist us because we have that name, secret, right? And they're withdrawing from Canada and the US, and they're saying, okay, we can't have anything to do with anything that is privacy related because it funds money laundering, it funds terrorist activities. We need to take a step back or we're gonna get consequences. So that's been really challenging, even as a confidential computing platform, layer one, we are seeing the problems that are happening with the US enforcement by, regulation by enforcement actions.
Yeah, and Teana, you work for a true multinational. How does Circle think about US regulations as it pertains to its operations in Europe, per se?
Yes, well, obviously we are a pro-regulation company. We're a very centralized company, and as the issuer of a fully backed one-to-one reserved digital dollar, there is certainly a U.S. nexus for our company, which is impossible to deny. So one of the things that Circle is obviously very committed to and focused on is working with policymakers to implement very specific guidelines and rules for stablecoins. And there is a bill at the moment that has passed the House Financial Services Committee, and we're hoping that that bill progresses through Congress, ideally this session. There's been a lot of focus on stablecoin policy in the US and around the world, and I think that has to do with that nexus, right? So you are creating an asset that is reflective of an underlying currency. Circle also has a digital euro, euro coin, and so that's also backed by euros, just like USDC is backed by dollars. And so when you're operating in those contexts and you're able to plug into potentially the traditional payments ecosystem, there needs to be very clear understanding of obligations, and the earlier panel was talking about segregation of assets and where those reserves are held and how, etc. So we're very supportive of the U.S. progressing with those guidelines, and hopefully we start to see countries around the world looking at how they're going to regulate not just stablecoins but crypto assets more generally with a lens of equivalence, right? Or harmonization to some degree, because as we're talking about in the panel before, there's very strict guidelines for how stablecoins can be offered in Europe. And those depend on whether or not it is a European denominated stablecoin or a US or other denominated stablecoin. And so how do those rules then align with a home jurisdiction for a US denominated stablecoin? There could be a lot of oversight and supervisory friction there if the rules are so different. And we're starting to see that in other jurisdictions where, hopefully regulators and policymakers are picking up the phone and calling each other, or working through, the global government bodies that we have, like the BIS and the Financial Stability Board. And a good example of this would be FATF, right, the Financial Action Task Force, which a couple of years ago created these guidelines for every country in the world, basically, to put in place money laundering prevention, specifically for crypto assets, which is very reflective of the Bank Secrecy Act, and which already existed, right? And I think it is, no coincidence that the U.S. was the president of the FATF during this period, right, when these guidelines were enforced. But what that did do was create a level playing field around the world for crypto asset businesses to understand what their money laundering and counterterrorism prevention obligations were. And so hopefully, as we start looking at bringing other types of specifically centralized crypto asset activity into the regulated perimeter, like Josh mentioned earlier, we're doing that in a way that's consistent, that allows global companies, and not just a global company, but digital assets by their nature are borderless, and so they're going to move around. And if we don't have some level of harmonization of those rules, I think it's going to create a lot of friction and more potential regulatory arbitrage than we've seen previously.
I just wanted to add to that. It can also create this sort of walled garden where certain people are walled off from participating in, like, some of the U.S. regulations I've been looking at with exchanges being proactive in reporting who's interacting on their platforms, and then if any wallet is touching a mixer, it has to be walled out. Right? Yeah. So these are things that could potentially prevent certain groups and certain regions from participating in the global economy, which is, is meant to be borderless. I think people will still participate. It's just they won't have the legal right to do so.
I mean, that's one of my fears, is we end up into like a true dichotomy of crypto in the U.S., crypto everywhere else. It can go one way, but it can't go back another way. You touch a Tornado Cash wallet, and you can't use the rest of the assets that are in that wallet in the U.S. Like that's the sort of thing that keeps me up at night, because as an American citizen, proud of our tech industry to an extent. They're not evil, but really has driven our economy for the last 20 years. The idea of what we would be currently like if in the first year of operations, Google had been told, no, you have to go to the Cayman Islands, or sorry, you have to go to Mauritius. We wouldn't have the products that we have now. So that is my fear as someone who supports the space, is this exact thing.
But see, I think what's happening is that the way that this capital is able to be deployed in this borderless way, we're seeing capital now deployed in, Southeast Asia and the Middle East, and areas of Japan, other G20, G7 countries. And so if we have G7 countries like the UK and the US, which are approaching this on a very activity-specific case by case, and leaning into, as Josh mentioned, that case law where the precedent sits, as opposed to kind of looking at this as net new economic activity that is deployable in a way that was not previously available to us before. You're going to have challenges in being able to apply this type of activity into the existing frameworks. And so what happens to those countries? And I think that there is the potential for those jurisdictions that don't kind of pony up to the table and start addressing this in a proportionate, practical way, that the capital will just leap over those countries. And I think that's one of the challenges we're seeing in the US, where companies are thinking about leaving, or indeed leaving, and moving to places like, Portugal, for example, as a key attractor. But we're seeing that happen now with companies looking to move to South Korea, looking to move to Dubai, looking to move to Abu Dhabi, because there's a clear framework, there's access to bank accounts, there's access to other professional services. It's not just enough to put in place a regulatory framework, but we see these challenges in the UK where there's rules, but then you can't get a bank account, and you can't get an auditor, and you can't get insurance. And so how is a regulated business supposed to operate without those professional services that everybody needs? So I think that there is the potential for, the idea that everybody's going to pack up and leave the US, I also think is a bit absurd. but it becomes a real capital investment, both in time, money, and just a lot of energy for those businesses that continue to show up in the U.S. and try and push forward, practical, balanced policy.
Well, yeah, I mean, like, how many founders do we have in the room? Show of hands. Normal U.S. startup, Canadian startup, $100 to incorporate a C corp. Standard crypto incorporation in the Cayman Islands, $12,000. BVI, $4,000. Just the sheer friction to that is.
Well, and that's not necessarily going to change either. Even when those rules are in place, I think Mary Beth mentioned, it's not just enough to go to Spain and apply for a VASP license. You now need a general manager. You now need a head of finance. You need a money laundering reporting officer. You need a chief compliance officer. Those are 4 senior, expensive people, and they need to live in Spain, and they need to be running that business separately, agnostically from the parents, right? So, when you're thinking about relocating, there's a lot of considerations, but if companies are looking at that and still deciding that it is a good move for them because the situation at home is so untenable, I think that really speaks to the challenge in the U.S. at the moment.
Well, I think, how realistic is it to expect that the U.S., regulation in the U.S. moves very, very slowly, and the rate of acceleration of technology is increasing and increasing. DeFi today is nothing like DeFi was a year ago, and 5 years ago it didn't exist. So how is it even possible? What else did we expect, right? Except that regulators would not have a clue what to do with this new thing, these new asset classes. And how realistic is it to think that we can solve this? What does the future hold, really, in the U.S.?
Well, I think the answer to that is we need to see the pruning of the gerontocracy, and a bunch of senators who are over the age of 70 need to die or leave office so that younger people who understand these things can take elected office and actually have practical rules. That's just my own personal view, not my firm's view or anything like that. But, and I didn't start with this. Some of us are lawyers up here, but we're not your lawyers. It's all just educational information. That's my standard disclaimer. But yeah, truly, I think that the real change is going to happen when there's a regime change in the U.S.
So I certainly, as an American who hasn't lived in the U.S. for 20 years, I sit back and kind of watch some of the things that are happening, and I'm baffled by, the idea that there's no Speaker of the House and it takes weeks to get one, right? We put these people in office to govern, and sometimes I question whether or not they remember that that's what they're there to do. However, having said that, I think that there are ways in which the industry can show up, participate, have a place at the table, and actually proactively contribute to these policy discussions in a meaningful way. I look at MiCA and through the lens of its successful regime, or it purports to be. We'll see what happens once it's implemented. But there's a number of things within it that are just impractical, or maybe actually technologically impossible to comply with. And the reason some of those things are in there are because nobody was talking to the European Commission as these things were being drafted. And then when it got to kind of the end and this trilogue period, then everybody was like, oh my God, this is really bad. But it was too late, right? So, I think on the panel earlier, Josh mentioned the Department of Commerce. There are areas of government that are getting involved in these policy discussions. The National Institute for Standards and Technology is another one. They have an open consultation out. They're looking at AI, they're looking at crypto assets, they're looking at kind of the future of money. So there are ways that the industry can contribute to education that I think are absolutely imperative, and especially in areas around privacy versus secrecy. Just because something is private doesn't mean that I'm doing something wrong or that I'm withholding information that you should have, right? I have a right to privacy, and being able to distill privacy preserving technologies and what those are and how they're used, I think is a critical area where we can educate. I think identity is another area.
I just wanted to interrupt.
So I think that if we take those areas where they're not specifically battling about what's decentralization and what's not, and we start to focus on education across a broad piece, instead of kind of hiding in the corner and waiting for something to happen to us, I think we'll get potentially better results.
Well, Lisa, I think you had some...
I just wanted to interject a funny story in what you were saying about not talking to the regime. There was a funny story in one of the states. They had a bill proposed that if anything happened on the blockchain, the government would have the ability to force a fork of the blockchain, which is just, I mean, if you're in blockchain, obviously it's an absurd idea. But the fact that lawmakers thought that that was a possible response to force a blockchain, a layer 1 blockchain, to actually fork in order to correct something that had happened that was illegal is just like a really good example of how you do have to talk to the lawmakers. But I didn't want to interrupt you about the difference between privacy and secrecy. I think that's what you were about.
I was actually, you were talking about your efforts on the Hill with lobbying.
Yeah, so lobbying, recently was Global Encryption Day, and so we're part of the Universal Privacy Alliance group, which together with Stand with Crypto from Coinbase, had a congressional briefing with Tom Emmer on October 17th. So we went to talk about privacy, why privacy is important, why it's not a bad word, and how important it is to have privacy-preserving technologies. And I've heard, even today, I keep hearing this note of, well, I'm not doing anything bad, so I don't have anything to hide. Even regular people think that that is a reasonable thing to say, but it's not.
Absolutely not.
It's not reasonable, because you don't keep your curtains open all the time in your house, because you do need privacy. We just take privacy for granted right now, and I think we're sleepwalking into a future where all our rights to privacy could be eroded away, and suddenly we're like, wait, what kind of a world do we live in now?
Oh, the end result of the CBDC is an absolute dystopian future where you have one too many Big Macs and your insurer sees that you've paid
100%.
and then your health insurance goes up. And that's a real outcome that could happen. And I know that Circle's working really hard to have that not be our outcome. But
I mean, yeah, that is a very real possibility when you look at the amount of data that's about running around us already, right? So if you look at payment apps like Apple Pay, Apple has an awful lot of information about you. They're probably one of the better privacy advocates amongst their kind of competitive set, right? But being able to combine the information that is out there about you that you're not even consciously aware of, and start to make algorithmic decisions about how much you should pay for insurance, or whether or not this comes into money through the lens of CBDCs, right? So if you have government issued digital currencies that have potential limits on how they can be spent, and the ability to have programmability within this money, and you show up to the grocery store and you decide, having a Super Bowl party and you're buying a couple cases of beer and the computer says no because you've drank too much this month. I mean, that is a potential. I think the other thing that I would really encourage people to do, and I know that this is hard and this is not kind of your area of expertise, but this is why we have trade bodies. Join a trade body, because they'll be looking at other types of policy making or legislation that might not be specifically crypto related. So for example, a bill just passed in the UK. It was called the Online Safety Bill. And it had been around for years and years and years. And it was one of these Christmas tree bills where people have all their asks and they keep adding ornaments to the bill. So it was taking a really long time to get passed. And by the time it was ready to get passed, there was some extra additions right at the end around encryption. And what they were trying to do was prevent child pornography being exchanged on Telegram and WhatsApp. And through COVID inquiries, they also realized that MPs were avoiding communicating on official channels because they were using WhatsApp. They were like, what's this WhatsApp? What is all this information being shared on WhatsApp? We should lock that down, right? Now, there might have been ways to put measures in place to prevent child pornography that didn't necessarily attack encryption, but because this bill had been out there for so long and people had kind of lost the will, I just wanted to get it done. There were several areas around the language, around encryption, that I think potentially could have some impact on smart contracts down the road, right? And so, now the whole process starts, speaking to the Law Commission to get them to go back and take a look at this, right? So, I think we get very focused on crypto policy, but I think that we need to be a little bit more broad-minded in how disruptive technologies are being potentially policed and how it could impact things like privacy, decentralization, and some of the other tenets that, our industry is built upon.
That's a great point. Looks like we're out of time, unfortunately. I would say for everyone, utilize AI to generate letters to your representatives. Send them in. People are forced to read them, at least in the US. You can make a difference, and now you don't have to actually write the letter. You can just use ChatGPT to have it write for you. So
yeah, that's a great point. I think people don't realize that really quickly. If the offices, your Congress people and your senators, they keep track of the that people call on.
Well, thank you for talking with us today, guys, and thank you, ladies, for this wonderful panel. Everybody have a great rest of your time.